IMF has recently forecast that the world's growth rate is falling and India's economy rate, growth rate is higher, it's going up. So what's your comment on that?
Well, so the World Bank and the IMF, as you know, recently had their annual meetings in Washington, and that's usually the time when we reevaluate our economic forecasts, right, for the outer years. And the World Bank, like the IMF, are very consistent in their forecast that India remains, and by a wide margin, the fastest growing large economy in the world. In fact, making now a very significant contribution to world growth, by virtue of the fact that India is supposed to grow over the foreseeable future anywhere between 6 and 7%, which is significantly higher than what we expect the developed economies or even the African continent, for example, to grow. So yes, India is the positive news, if you want, on the growth front. We forecast that India will grow anywhere between 6.3 and 7% over the foreseeable future.
Can you give the duration, like the foreseeable future? Is it by 26 or 27?
Well, so the way that we do this, we have our models that basically look at the fundamentals of the economy, right? The size of the working population, the capital stock, the productivity trends, and there's no reason for India to grow, significantly below 6% just because it is such a dynamic, it has a large population, a rate of entrance into the labor force that mechanically gives you a very high growth. I think the real question that is relevant for India is not whether we'll continue to grow at 6. The question is what can we do to grow at 10, right? And that's the question where you stop to rely on kind of your natural assets, your natural strength, your large your working age population, your capital stock, and you think about productivity, you think about being more efficient, you think about integrating into global value chains, and what will give you that delta from good to great.
So what are the major factors which are supporting this growth? What are the tailwinds?
Well, so the tailwinds is the fact that India is a huge market already per se, right? So the type of vulnerability to external developments that small open economies will face in terms of uncertainty is much less binding for a country like India, which is by and large has this huge domestic market and is therefore less exposed to global volatility.